Good day traders, and in this video we're gonna have yet another look at the gold price perspective, but this time in the shorter period of time. Last time we analyzed the gold on the daily time frame, but this time we will look at the 4-hour chart. But before we get started, don't forget to subscribe to our channel and click the notification bell to follow all the videos. And I would like to remind you that information in this video is for educational purpose only and should not be considered as the financial advice. What we have on the gold, first off, is the simple uptrend trend line. There was a very clean rejection back on the 23rd of December, where price actually found the support where the previous support has been formed, which is the area at 1857. So this support got rejected twice along with a 200 exponential moving average. At the same time, what we see is price producing higher highs and higher lows. Of course, this can be an ABC correction after which price will fall down. It is possible, but to confirm this scenario, we must remain below this, and at the same time we must break below this key support area and the moving average. But so far it seems to start turning bullish rather than the bearish. Now what we have also is the potential reversed head and shoulders pattern. We can see that the neckline of the pattern has been broken, and now it is acting as the support along with the uptrend trend line and the 200 exponential moving average. And as long as price remains above this area, there is strong probability of an uptrend. But at the same time, what we see is the fibs applied to the last wave up shows that 38.2% retracement level has been rejected cleanly today. This is now the nearest resistance, which definitely must be broken in order for the price to continue rising. If the price will not break it and will break to the downside, then the ABC is likely to be confirmed and we will see the downside move. But if there will be a break above this resistance, price is likely to go up towards the $1,940 area. Now this area is confirmed also by two fibs. The first one is applied to the overall downtrend, where we have 88.6% retracement level, and the second one is applied to this correction after price broke the neckline and broke this resistance area as well as the support, and after price broke above the 200 exponential moving average. These two fibs show us the potential area of resistance, which is located between $1,938 and $1,943. What is happening right now is that the price is kind of stuck between the support and resistance. The resistance is at $1,884 and the support is at $1,857. There might be no breakout and there could be a consolidation going on, down, up, down, up. We might be looking for some sort of range trading throughout today and tomorrow, but it will be very important to see the breakout either to the upside or to the downside. If this resistance holds and price will produce a new lower low, this means that the uptrend trend line potentially broken and the downside risk will increase substantially. We need to hold this low, and at the same time we need to break above the resistance to confirm an uptrend. Now let's have a look at our daily chart for the gold. These are the scenarios that I would expect. So far we're looking for either the break to the upside or correctional move down. So this is two scenarios that can take place. And in today's analysis, we suggest that the price is likely to break to the upside. And this is what might be happening. We might be seeing wave 1, 2, 3, 4, and 5. So this will be the final wave of this overall move, which is likely to hit $1,940 area. And then we will see a sharp decline potentially towards 1880, which is also previously mentioned support area. But as I said, the upside move is not confirmed, but it might be confirmed today or tomorrow or sometime throughout this week. Up until this point, gold will remain bearish. Just want to make it clear. And also, it is best to break above this resistance also to confirm further bullish pressure. So far it's looking like the bullish pressure might be increasing, but definitely we need to break above the recently printed resistance. Let's go through all other analysis we did previously. Starting pound Australian dollar, still consolidating, expecting the upside move, but consolidation can be extended. Australia and New Zealand, as I expected also, we broke below and price has moved lower. So here we are invalidating this one. Analysis we published once the price was somewhere around this price area. It's still pretty good. I think there will be further downside correction and then continuation of an uptrend. So I will be closing this chart and I will return back to it once there are some more clarity to that. Swiss franc, Japanese yen. Yesterday was speaking about the potential correction up. It occurred. Still a downtrend because we have a double top produced, and at some point, I think tomorrow, we might be seeing stronger move to the downside. So very natural moving market, nothing special. Expected this upside move. Next is Australian Swiss franc, and it is very bullish still. Nothing has changed, although we saw this minor correction today back to the uptrend trend line, rejected. So maybe this is the point when the trend will finally start. I mean, the trend will start being strong, because right now we see it's a very sluggish rise. Maybe it will start to be stronger throughout this week. The euro Swiss franc, bullish, nothing has changed. Price still more or less at the same price area, but we can see that the higher highs and higher lows are being printed. Clearly, this is the bullish trend. As long as this support holds, I would expect euro Swiss franc to test 1.1 psychological resistance. This is a very strong psychological level and definitely should be watched for the rejection or the breakout. The pound Swiss franc still consolidating along with the pound pairs, but at some point in time, I think there will be a big move up. So still waiting on some sort of price action. Pound New Zealand dollar. Well, this one, we got broken to the upside. The price has reached this resistance and then it broke below the support. So what we see is more of a stop loss kick out moves because resistance broken, support broken. Now what might be happening is the potential test of the support trend line. So price can be moving lower towards this support and then going up. But in the long run, I think it will remain bullish. We need to watch also the daily time frame, and only upon the daily break and close below the support, this analysis will be invalidated. At the moment, we might be seeing only a spike and the price maybe will be going quite ballistic today. If not, we will invalidate these analysis. The US oil, well, pretty much as expected, corrected up towards this resistance, but now I think there will be more consolidation and only then price will go down. Potentially tonight price will retest this high and then go down, but it does start to look more bearish than bullish, and certainly sellers will be looking for this opportunity because the risk to reward ratio is pretty good. The pound dollar seems to continue moving upwards and still expecting one of the resistances to be tested. The euro dollar, we see that there is a potential break to the upside, which might result in the continuation of an uptrend. But we need to have a daily break and close above 122.58. Only then it could be confirmed, and then price is likely to move towards this resistance at 126.54. The dollar Swiss franc, we did not have a confirmation of the buying opportunity because daily close still remains below this resistance area, and this might be the continuation of the downtrend. Let's see whether there will be a breakout to the downside or not, but there are no clear signs that the price is going up at this point, so we might be seeing the second scenario of the downtrend continuation, although for this we need to have a daily break and close below 88.19. Up until then it might be either range trading or pulling back up. The Euro Canadian uptrend valid, there are no changes. It remains very interesting for buyers in my view. after this rejection of the support. So after we published the analysis yesterday, price actually produced a nice green candle. Today pullback. Let's see whether we might be able to go further up. The Australian dollar also continues to move up. Maybe this will be the rally up until the end of the month. So throughout this week there could be these strong bullish candles. Nonetheless, maybe it also will consolidate, but long-term trend is definitely bullish. The New Zealand against the dollar broke the resistance and the uptrend continues. So it seems like the price is likely to move further up. So we will wait and see whether the New Zealand dollar will manage to break higher. If not, the correction will be still expected. So we are continuing to follow on this one and we'll see what will be happening throughout this week. So that's it, guys. I hope you enjoyed the gold analysis, short-term outlook where we expect the move to the upside, potentially $60 growth upon the break below the 1884 resistance, only then, not before. And if you agree with that, click the like. If you disagree, let us know down in the comments below what is your strategy for the gold. We will get back to that tomorrow and see what has happened. And before we finish, don't forget to subscribe to our channel to follow the videos we do every day. Take care and I wish you profits.